This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. It has been kind of a choppy week here in the cattle markets. We saw the big technical breakdown earlier in the week, and the ideas of cash softening up has come to play true. We've seen cash here, Texas and Kansas earlier in the week at 127. This is slightly softer than what we've seen here over the past couple of weeks. So I think a lot of that was probably priced in, but ultimately if we continue to trade at 127, that keeps the floor in the April contract. I think there's tremendous buying opportunity if the market were to continue to break down towards 125. This represents a key Fibonacci retracement as well as a 100-day moving average. So right here in the middle of no man's land, we're looking to see if we can either sell at higher prices or buy at lower prices. So sometimes the best trade is no trade. So we're watching that very closely to get on either ends of that sell side or buy side. Now on the feeder cattle side of things, we've kind of been a little bit more choppy, I guess you could say. 143 to 147 has been the range here over the last week and a half, and the market's really just looking for new direction. And if we do get a short covering rally in the grains, I wouldn't be surprised to see that new direction be a break lower. If we break and close below 143, I think that opens the door for a retest of the December lows near 141. Now, wrapping things up with the lean hog market, lean hogs have been on a tear of V-shaped recovery. We were oversold, rebounded significantly. You don't see the V-shaped recovery very often, but it tends to happen in the hog and cattle market more than any other market. So we went from oversold, now reaching overbought levels in a very short amount of time. Also technical resistance 66 to 66.50 represents a key retracement as well as a 100 and 200-day moving average. We failed out against that here earlier in the week, retreated, but still trying to find ground as the fundamentals look relatively supportive here over the near term. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.